We've seen a positive reaction to Obama's speech in the Asia-Pacific region, and U.S. futures are also looking higher. So has Obama got it right? Let's speak to Kumar Palghat. He was once voted Morningstar's International Fixed Interest Fund Manager of the Year. He's now founder and managing director of Kapstream Capital. He joins us from Sydney. Kumar, good to have you on the program. So what do you make of investor reaction? Are they simply skeptical that this thing will go through?
You're right. I think we don't have enough details of how they are actually going to fund the plans that the president has put out, right? As you guys were talking about earlier, I think what he's doing is the right steps that the U.S. needs to be taking. They need to be creating jobs, and the only way local jobs are created is to fund local companies, small businesses, cut their taxes, give them a tax break for plant and equipment and for hiring. So they've done that. They have to spend money on infrastructure, so that creates jobs. And then in the end, they also have to somehow reduce the burden of mortgage holders and the negative equity they have and the interest they're paying. So they're addressing all those things. The problem is that these things take a while, and two is, where is the money going to come from? So we don't have the details except to say that the Super 12 are going to somehow figure out where they're going to come up with another $450 billion on top of the $1.5 trillion.
Kumar, the stuff that you mentioned on the housing market there, that didn't really make it into the headlines. Did you see anything in there that could help the housing market other than keeping people in their jobs?
Well, think about it. A lot of people with negative equity in their homes are unable to refinance their homes because they got to come up with that negative equity.
Right.
So one way to put a bottom to the housing market is to take some of the money either from the government or even from the Fed, when the Fed eventually does a QE3, is to help the banks, help the homeowners refinance their houses at a lower rate but keep the mortgage amount the same. So that puts money into people's pockets. It lowers the level of mortgage, the interest that they have to pay, but the people that take the hit are the banks. So you sort of have to fund the banks. And once that level is done, you recapitalize them, and then things get better.
Right. Now, there were lots of other interesting nuggets in here that you haven't seen before. The Tea Party says, oh, we've done this before. This was the stimulus back in 2009. It didn't work then. Why would it work now? But you do see things in here like helping people get retrained. A lot of the CEOs we've been speaking to in America say they've got jobs, they want to hire people, but there aren't the people with the right skills that they need.
Well, Linzie, let's go back to QE1, what the Fed did and what the government did. You know, that was during the crisis. They bought a lot of companies. They saved the banks and financial institutions and car companies, etc. And then the Fed did QE2. They tried to lower interest rates. They bought mortgages. Now they really need to somehow figure out, not only from the Fed's perspective, but also from the government's perspective, how they're actually going to encourage businesses to hire people. The problem with fiscal side is it takes a while, and we're not sure if Congress is even going to approve this. It's going to take a little while, and therefore I don't think there's any quick fixes here. I think we're going to go back and forth for a little while.
Well, that suggests a lot more volatility, and I guess that would make sense because a lot of people are saying, well, this is the start of the 2012 election campaign, and the likelihood of Congress getting some agreement on this is pretty slim. What's the worst-case scenario? Do you think we'll at least get something out of Congress from this jobs plan, say those tax cuts, and then possibly something from the Fed? What's the end game? What do you see happening in the next, say, 6 months?
Well, you need all of the above, everything that you've listed. You need the Fed to come and say they're going to target the mortgage market and they're going to target the housing market. You need the Congress to pass the deficit funding and figure out $1.5 trillion. You also need help for the global economy, not only from the U.S. You've got all these issues in Europe. You guys were just talking about Greece. 2-year rates at 55%. That says that there's a possibility that Greece is going to default and there's going to be more problems in Europe. So globally, when you take all these headwinds, it is very difficult. Volatile markets is what you look forward to because there are no short-term quick fixes. All they can do is try to address them as much as they can.
If you had to try and call the bottom of the market, when and where would that be? Very quickly.
Are we calling the bottom of the equity markets? I think
Yes.
You've got a long ways to go, but if you're calling for the bottom of the bond markets, I think you're already there.
All right. Kumar Palghat there, founder and managing director of Kapstream Capital. Thanks for being with us.